The biggest housing bubble in history is already underway, and prices are set to rise much more until a crash pulls them back down. Millions of families worldwide are under a great deal of financial stress as a result of the enormous issues that regular Americans face in making ends meet with their rent or mortgage payments. As they become unable to keep up with escalating expenditures and interest rates, hundreds of thousands of devoted Americans may lose their homes in the upcoming months. We can be certain that although property prices increased by over 70% during the previous 10 years, earnings did not grow correspondingly. The expense of living in the U.S. is rising to sky-high heights, while on the other side, working conditions are becoming worse. Most middle-class employment don't provide enough money for employees to buy a house. In reality, rising costs are burdening even middle-class tenants, and this year is expected to be considerably more unaffordable than last. While demand remains high and the number of unoccupied homes and apartments drops to their lowest level in decades, families are being priced out of the market in increasing numbers. Meanwhile, affluent buyers are acquiring entire neighborhoods and competing in auctions, sometimes by paying millions more than the initial asking price. In addition, problems with the supply chain have contributed to the increase in building expenses. Key building supplies like plywood and timber have seen triple-digit price hikes over the previous 12 months as a result of raw material shortages and delivery delays. These elements are coming together to create the ideal storm for the U.S. real estate market. These market distortions have been a complete nightmare for prospective purchasers. In today's video, we've gathered some startling statistics that reveal the real estate of the housing market. Here are 20 startling facts regarding the new housing crisis. Welcome to 360 Economist. Before you read this list, don't forget to give it a thumbs up and subscribe to be informed of the newest news. 1. Currently, more than 60% of American households spend more than 30% of their monthly budgets on paying their mortgage or rent, according to the U.S. Department of Housing and Urban Development. This is considered to be a financial burden. 2. When compared to the typical asking price for an existing property, which is now $390,000, the median household income is $521. 3. Mortgage rates were 3.2% at the end of 2021, but they are now approaching 5%, and the Federal Reserve expects to raise rates at least 5 more times this year, which is expected to make the home affordability situation worse. 4. According to Wolf Richer of WolfStreet.com, as mortgage rates rise, more and more buyers are priced out at these exorbitant prices and they withdraw from the market, which is threatening to cool off the housing market's raging mania and result in an even bigger bubble burst than the previous housing market crash of 2008. Prices need to be sharply readjusted to our economic reality, he says, which will cause prices to be sharply readjusted to their current levels. 5. According to the National Organization of Realtors, 28 prospective buyers who had previously qualified for a mortgage rate of 3 are no longer able to purchase a property at a rate of 4.7%. 6. Sales of single-family homes fell by 7 in March alone, while condo sales fell by 9.5 last month as more and more Americans are being priced out of the market. 7. Zillow statistics shows that over the past year, national rent increased by 17%. 8. In the large cities like Miami, rents increased shockingly by 32% on an annual basis. In Austin, rent rates increased by 40% during the previous 12 months. 9. According to Redfin statistics, the average rent in the U.S. is currently $1,877 per month, which is the greatest rise since 2014. 10. While renter wages only climbed by 0.5%, inflation-adjusted rental costs rose by 13%. 11. According to a Roosevelt Institute analysis, the expense of housing burdens 20.4 million households, or about half of all American renters. 12. Approximately 23% of renters, according to the Pew Research Center, spend 50% or more of their income on rent. 13. According to a poll of Consumer Finances, 61% of American tenants, or almost 6 out of 10 renters, are low-wage employees. 14. At least 8 million Americans are still at least 1 month behind on their rent payments today, despite the government providing $2.3 trillion in assistance to help delinquent tenants pay their back rents last year. This is because of shifting laws and bureaucracy. 15. Approximately $21.3 billion are owed in rent debt in America, with each tenant owing an average of $3,700. 16. Currently at 8.22%, the mortgage delinquency rate is barely 1% lower than it was before the subprime mortgage crisis that caused the 2008 housing market catastrophe. 17. Lenders began to foreclosure procedure on 16,545 residences in February of 2022, which is an increase of 40 from January and 176 from a year earlier. 18. Despite the CDC's eviction moratorium, according to Bloomberg, at least 49,000 renters were evicted between June 2020 and July 2021. 19. Zillow predictions state that property prices are anticipated to increase by 22% in August 2022 before plummeting 16.4% by December. 20. According to a Pew Research Center poll, 49% of Americans think a key issue with their neighborhood is a lack of affordable housing. We all grew up believing that one day we would own our own homes and be able to live happily with our families. But that goal is no longer within our grasp. Due to being evicted from their houses, many parents will have to spend tonight sleeping in their cars with their kids. You might end up losing all you own if you lose your job or have one unforeseen medical emergency. The opportunity to purchase an inexpensive home has turned into a privilege in the present economic climate, where living expenditures continue to rise while our purchasing power continues to decline. The younger generations are being affected by this new housing crisis since they will have to wait much longer to begin accumulating equity. This is the best case scenario because Given the state of the labor market today and the scarcity of good jobs, it is safe to say that many people won't ever have the opportunity to purchase a home, since the real estate market will only continue to deteriorate this year. Everyone will have to put forth heroic efforts in order to meet the challenges that lie ahead. Thank you for watching. We look forward to seeing you in our future videos.